Hello everyone, it is Evan from the Trade Risk on Saturday, November 14th, here with a weekend market recap. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, individual names, and then some trade ideas to kick off the new week. We got a lot of material to cover this video, so we're going to start with the weekly chart of the S&P 500, the SPY ETF, and this was our first down week in the past 6 weeks. This was our 7th week. It was finally a red week, and the sellers were in control with some force this week, down 3.5%, and we basically took out the prior 3 weeks of gains in just this 1 week. So here's where we are from the weekly chart. You can see there's a few critical things that happened this week, and I'm going to try and give you sort of the good and the bad of where we are and what's happened here recently. So if we look at a daily chart, we can see that we did close on the lows of the week, and selling did seem to intensify a bit on Thursday and Friday, particularly when we took out this minor support level that we were kind of carving out here for a couple of days around 207. We had that gap below it, and then we just traded lower and closed on the lows Thursday, followed up with this, basically the same thing on Friday. Now there's a couple of points to note here. First, let me put on some of these recent support lines so we can get a better idea of maybe where price is headed, and we can also look at where it's come from. Now on Thursday, when we had this strong close, this weak close on the lows, I did make a note to members that given this candle here, I did expect to see some more acceleration lower in the near term, and of course we did see that on Friday, and you know, certainly that didn't have to happen. But my rationale really was, our first clue here was that, well, we took out this 207 line of support, so we did have that kind of strike against the bulls, and then we broke clearly below this 20-period exponential moving average, and then really what I was looking at was we were losing this band of support that we were in and that held as support earlier in the year. Again, I've talked about this level quite a bit, right around 205 in the SPY, but it's a pretty important level, just given how much it held up the market and how the buyers did step in and sort of pivot there so many times in the past. And very similar to, this candle here on Thursday, you can see looks very similar to this candle right here on Thursday on August 20th, before the big drop came. Now again, I'm not saying that a big drop just like this is going to come, but it just kind of reinforces that that's a critical level and something that the market cares about. So we did see that acceleration lower on Friday, so that is the concerning part, is that of course now clearly the bears are in control short term, and the fast moving averages all curling lower here, and some of these longer ones like the 20 period. Now the optimistic side of it is with these Fibonacci's that I have drawn here, the Fibonacci retracement from the swing lows in September down around 186 or so, all the way up to the recent highs at 212. And if you look at where we are relative to that swing, we are just coming in now to the 38.2% retracement. So really, when you think about trends and how markets move, we've only retraced still, even though Thursday and Friday may have seemed extreme to some, we've only retraced 38% of this move, and still in very healthy fashion. And if you think about it, I mean, even if we came down to retest 50%, that would still be around 200. That'd be around the SPY 200. That would be a pretty big level, because we would be effectively retesting this breakout that happened back on October the 7th, October the 8th. And I think all things considered, if the market even did come down to this 200, retested this breakout level, and held, we could easily start to make our way back towards highs. Now again, this action could take many days, weeks to unfold. I'm not saying, I'm not trying to put a timeline and any predictions here. I'm just kind of showing the levels and where we could maybe expect price to go. I think also right around this 201 level is something to watch, and we're close to it. But this did hold as some support here for a few weeks. Let me take this Fibonacci off. You can see here basically this midweek here in October, you could see the market was finding some support right around 201.50 or a little under 202. So the market quickly coming into a point here that could hold as well. So that's sort of the roadmap here of where we're at. I think again, you're probably seeing, especially underneath the surface and in particular stocks, you're seeing some things hold up, you're seeing some things get hammered, and I think there's still opportunity on both sides, but clearly momentum is now heading lower, and because we have sold off now in a pretty quick fashion, especially with these past 3 days or so, and as we start to come into some of these bigger levels like 200 and 201, it is starting to get more interesting to maybe play for that potential bounce or what have you as we start to get a little bit stretched coming into some of these interesting levels. So that's sort of where I'm at with the market right now. To give you some perspective, I think we had maybe 7 or so longs up here right around 210, and we've slowly just been getting weeded out of those longs. We put on a new position on the close on Friday, but we're really down to 3 positions. So you can see we started to get trailed out of of what we were holding, and we still have some things that are holding up. We put on a new one on Friday, so that's pretty much where we're at. So if we look at some other markets, the IWM, this doesn't look as perhaps damaged as maybe the SPY does, but it did lose this critical level of right around 116 or so, and it's I guess Friday could have been a day or Thursday could have been this little fake out retest, overshoot, and then Friday maybe bounce back, but we didn't quite see that. We are seeing this continue lower here, and that is a bit concerning to think that we might fall back into this range and just chop it out some more. Again, we'll have to see how this how this all plays out, but ideally you want to see this market back above 116 or so to start getting more constructive on the IWM. Right now, looking like a false breakout here over the past couple of weeks above 116 or so. And the Qs, which is also another slightly concerning one. We did have this really kind of glaring open gap here, and we really got that closed right to the penny, I think, on Friday. So that is closed. Perhaps the market sort of had intentions to get that filled before we could move higher. So we'll have to see how this one plays out as well. This one, the slightly concerning part about the Qs here is there's not a whole lot of support in the near term now. This market is pretty vulnerable. Really, the next level that held previously was right around 106 or so. So that's a good amount that this could continue to fall lower. And again, we can easily put in a pivot here above. Not saying that it has to trade to one of these bigger levels, but as far as landmarks to look at, that's probably the next big one on the downside. So you do have some room there in the Qs, something that's a little more interesting and maybe slightly concerning. So that is essentially the take there on some of the big market indices. Now, if we look at some other markets, let's jump into bonds here, TLT. We did get a little bit of a pop towards the end of this week, but still it has been getting beaten up a little bit. It's in this messy range. It's tough to get too excited about this market. I think it's still just grinding out here. It has to get back above 123 or so to really get some momentum in this. Otherwise, maybe it'll fill this gap, but it is coming into some of these declining fast-moving averages. Really just not that interesting to me. USO, this one continues to get beaten up here ever since breaking back below this 14.25 support level that it was in. Looks like these lows back from August are in play, and we'll have to see if the market gets down there and retests them or not in the coming days, weeks. UNG, a little more constructive, so perhaps we are getting some type of short-term bottom to work against. Looks like, we did see this nice follow through to the upside on Friday. Maybe these lows down here around 950 want to hold for a little bit. Again, still has a lot to prove, still needs to go sideways, in my opinion, a lot more to start to work off some of this the recent sort of cascade of selling that's happened, but slightly constructive there, I suppose, for UNG. Next, we'll look at the metals. Gold, back to these lows back from August. Still, price seems to have stopped a little bit, as suggested by Thursday, but still, as stretched as it was, hasn't really put in any type of meaningful bounce or snapback. Maybe it's coming next week. So slightly, definitely concerning here. Not something I'd want to be playing in. Silver, similar situation, back to these lows from 2015, and concerning here as well, so not looking too good. Now, if we go to sector analysis here, a lot of things have gotten hammered here on this recent slide now in the market, but three sectors that are still interesting. I think XLF, the financials, still holding up pretty good, all things considered. It is starting to lose this $24 level, which is a little concerning. You want to see if we can get some buyers to step in and put a little pivot low in here sooner than later. But XLF on a relative basis is holding up slightly better than the rest. Materials as well. Notice on Friday we did see a strong green day despite most of the market red, and still trying to hang out here. It's got some support down here right around this area. It does seem to be paying attention to it, 43.50 or so. So the material names, which have been laggard for most of 2015, again are continuing to show a little bit of resiliency here. So I'd look to those names if you are looking for some long ideas. And then finally XLI, the industrials, holding up on a relative basis a little bit better than the rest, but still sort of vulnerable here. As you can see, it's starting to lose some of these fast-moving averages. So just some those three sectors to think about if you are starting to look for some long ideas into some of these support levels if the market continues to sell off. Now, if we look at some individual names now, we'll run through a handful of them, some of the big ones that we watch. Apple. Again, this one, we said we wanted to give this a couple of days, see how it closed out the week after this gap here, which took the momentum right out of this name on the long side. And we did get our answer to this, and it is lower. We are firmly back below this area here, which I think is important. This one is a little bit of concern now. It's, at the very least, looks like it wants to comfortably chop around back here, but certainly the momentum back in the bears' favor. Again, we talked about maybe is this some big head and shoulders pattern, or whatever you want to call it there. I don't know. Again, still early, but slightly concerning there for Apple. Google, same thing, momentum coming out of it, still holding up pretty damn well, though, all things considered, still above the 20-period exponential moving average. So, could come down a little bit. I think this is healthy, all things considered. So Google, a little bit of momentum coming out of there. Same thing with Apple, but again, even with a 3.5% down day, just finally breaking below the 8-period EMA and still holding above the 20. So still very strong, healthy pullback. If we can actually see a pullback that's more than just a couple of days in each of those names. Netflix, back in this, firmly back in this range. I think this, again, is healthy, constructive action. I'm looking for this to base out here, give us a stronger signal whenever this decides to break lower or break higher. So I think that is eventually shaping up to be a more constructive for us. Facebook closing this gap, what's left of it, again, similar to Google and Amazon. Some pullback here. I think it's constructive. Very similar look to all of these names, really. Twitter, this one is certainly one of the more vulnerable ones in this space. It's below $27, $28. This band right here, I think this one's certainly vulnerable. Looks like it's beelining for these pivot lows down here right around 24.40. Fast moving averages curling, aggressively coming down. So that is certainly looks like the sellers are in control there until we see otherwise. Alibaba, this one continues to work lower as well. It's had a strong run, all things considered, pretty healthy in my opinion, the way this is retracing lower. GoPro, there's nothing healthy about this whatsoever. This resolved lower from its tight sort of immediate range that it traded in following its earnings. And it's just getting hammered again, and there seems to be no end in sight here. So certainly, perhaps oversold. Maybe you get some type of snapback here soon or early next week, but it's still just horribly damaged there, so not too interesting. Tesla, this one is back to its pre-earnings lows here, right around 206 or so. Looks like if it loses this level, there's a lot of support, or a lot of attempted, there was a lot of support in here in mid to end October before the earnings. And now if it loses these lows, I would have to imagine that this would be a fast swoop lower back down to these sub 200 prices. in the near coming future. Now, that's about it on some of the big names. I wanted to run through a few trade ideas to have on watch. Some of these aren't really all that actionable just now, but they're things to just at least take notice of. HRL, you know, when you think about what the market's done recently, this past week, down 3.5%, you look at some of these names that are still holding up in a tight range up here. Again, maybe vulnerable as it's testing support, but if the market does start to turn around, if we do get a bounce, these are some names to at least think about, maybe on the long side, and especially if they do start to resolve out through the upside here, if we do see that bounce. So HRL, again, you know, you can do this however you want, but it is holding up pretty good, all things considered. AXS, this one really on a weekly chart, if you see what this is doing here, it looks like, you know, might need a little more time as well, but if it can get through probably these highs up here right around $56, this one looks like it could continue to pop here. Slightly more boring, maybe insurance name, but it is, you know, staying pretty resilient despite the market recently. Monsanto, this one was green on Friday, still holding up. It's been in an uptrend. It's holding its fast-moving averages. You can see it really needs to get back above this $94 level, but this one, you know, if it can get above $94 or Friday's highs, looks like it could continue to pop. So it had some nice relative strength there on Friday. And then finally, SIX, Six Flags. This one, again, similar to HRL, this one's holding up pretty high and tight given the recent market weakness. So you do want to keep an eye on this one as well. If the market does head higher, then this one might be a good go-to stock for a breakout. And that's it. That's what I have for ideas and for the video this weekend. So I hope you enjoyed the video. As always, if you like them, please do subscribe to the YouTube bottom right-hand corner. And as always, thanks for watching. I will catch you next time.